Ladies and gentlemen, welcome back. It is Monday, June 10th. It is 1:16 here on the West Coast. That means it's 4:16 up by Ben on the East Coast. Ben, how are we doing today?
Doing good, my friend. Doing good. How about you?
It's good, doing good. We got the Qs closing all-time highs, the SPY closing all-time highs. Market's looking pretty good. There's a couple things that have me peeling back risk a little bit, but
Okay.
overall I'd say things are looking pretty good. But let's stop all this chit chat. Let's get right into the charts. All right, so we got I got the SPY up here, and let me explain how I've looked at the SPY over a little bit. All right, so we had this big trend changing day back in the middle of April. We call this a knockout bar when it just changes of trend. The trend continues if you're able to climb back above that knockout bar, and that's why this area was so important. There's these momentum flagging right here. This was a buy signal on the Fed day, the Fed gap and go, when they announced they would be slowing down QT, quantitative tightening. That's taken effect now. That's began in June, so that's taken effect. We kind of got a sell signal, a slight sell signal, but we broke this area down, this little rounding top at highs. But then this Friday, this is what gets me back into the market. This Friday action, going 15-minute chart, it was pretty incessant buying at that first support area. So that was a very big cue to get back long risk. Then what happened the next couple days? Now I'm looking at this area in the chart. It comes down that following Monday, retest that area. The following day is an inside day. So it's like passing test one, passing test two, higher, low. And then we got that breakout move to highs. And this sideways action ever since, very, very healthy. So there's been some great trading under the hood. A lot of names I'm looking at. I don't have a ton of risk on right now. I had a bunch last week. Took some profit into the weekend because I don't like this ticking up in the 10-year. This 10-year, every time it's done one of these moves, it hasn't been one for one, but it's slowly signaled that some sort of pullback would happen. Meaning it could be a 1 to 2 day pullback. I don't know, but the 10-year along with the dollar is just absolutely raging. And then oil really, really has been pumping the last few days. So those three factors have me thinking we'll see not like a 5% pullback, like a couple down days, until these things get settled and they pick a direction, whether this is to continue, whether this move in the dollar is to continue, and whether this move in rates is to continue. The big news this week is Wednesday. We have CPI along with, that's in the morning. Then we got a Fed day where they're making a rate decision. Obviously, they're not going to cut rates yet. We're just going to get further intel whether that will be. It's looking like September, October, November is going to be the first rate cut if it happens this year. We'll see. We had a jobs report Friday that came in really, really, really hot, meaning it was a great number for the economy. Market doesn't necessarily want to see that right now, meaning they want an excuse to cut rates, but we were slightly down a number. Now we're just going sideways, closing all-time highs. Still looks good. Canada and the ECB notably began to cut rates, so that could begin the domino effect of cutting rates. Overall, flagging at highs. Things are looking good. So I've got some charts and traits to go over, but I'll spin it back to you if you want to go over some stuff first. I'll go over my stuff.
All right, give me 1 second. All right, so a couple quick sectors. Again, we've been talking about this T-Mobile. So we got telecom sector finally starting to push out of the flag that it's been in for most of the year. I guess most of the spring it was kind of flagging out earlier this year, but telecom sector finally pushing higher. Nice to see, our favorite name in the telecom space, T-Mobile, breaking out. We have, let me go back.
Oh, you annotated the risk reward, huh?
I did.
Annotated the risk reward. This is a flex if I've ever seen it.
Yeah.
All right, player.
How to do some.
I like it. That's
reviews.
energy I want to see. That's energy.
So again, telecom doing very good. Financials setting up nicely here. Tight little base here. Again, we have this bigger breakout through this like 103 area, but keep an eye on some of the financial names. Keep an eye on some of the industrial names. Same thing. Nice little tight little consolidation here under this little support buyback area. And also keep an eye on the REITs. Again, they were in that breakdown stage most of the year, the last few weeks. So they've started to potentially transition to more of a base. So keep an eye there. And then avoiding energy. I was talking with one of the members earlier today, and he was looking at Oxy and trading very similar to
Joey
just
out in fucking Italy.
what's that?
Joey out in Italy.
Yeah.
Yeah. Okay. You just playing both sides, huh? I said, "What
So
do you do?" He's like trying to get me into this like deer trade, this macro. So I'm like, "Dude, go enjoy Italy.
yeah, like put the phone down.
It's
Um,
June 10th.
so
Go
that's
enjoy."
that. I can you remember this? Or the first trip we did when we went to Puerto Rico. I think
I
it
don't
was a
remember that. Nah, I don't know what you're
no, no,
talking about.
no, 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 no. It's not. It's I think it was T Fresh and I think it was Jordan, and they were like sitting in the house, like watching CNBC or CNN, like watching the market. And we're like, dude, we're in a different country. It's a beautiful like infinity pool. Like, just put the computer down. Like, it's the market's gonna be fun. Like, go enjoy your life. So yeah, Joe, do not buy Oxy right now. Again, energy is in a clear breakdown stage.
Hot, hot take though. Hot take though. I think energy is starting to bottom a little bit, but
No, yeah,
nothing yet. But I think it's slowly.
yeah. Again, just like with the chart, it's like I think more so of
Like,
just what he
the
was
reason
looking
I
at.
don't, all right, I kind of like. I don't mind starting this oxy. Check the weekly chart.
Mhm.
And it's just retesting this huge area. And it's always it just Buffett's been buying it comes out. Berkshire buys 55. Berkshire buys he's just been on the bid at 55
Yeah.
or 56. And it just comes out later. And then when it's at 68, it's like, oh, Buffett increased his stake.
Uh-huh.
So I wouldn't be surprised to see now it's retesting all these support areas if
Yeah.
it were, to bottom in this area. But it's not the sexiest
Yeah.
trade yet.
It's just, yeah. So again, it's like when it breaks its downtrend, awesome. But trying to anticipate this break of the downtrend, it's like you typically get in it too soon because you're waiting for like that, like you're looking way too soon for that bigger break, and then you kind of get shaken out before that
Maybe.
big move starts. So it just, I was just telling him like let it base out more, like let it
Yeah,
consolidate,
I'm,
let
I'm
it
with
trade,
that.
and eventually, look for it. But again, if he's on vacation, enjoy the vacation. Again, yesterday, me and Tim, we went racing. We were in this QRVO. Again, the market was closed yesterday, but it's kind of cool today that things breaking out. So just while I'm here, I'll go over a couple positions I'm in. So main one again was Tim called this QRV out last week. Again, I was just using this little P&L risk reward
Never seen
thing.
that one before. Market must be fucking pumping.
Um, so we got a low day stop. We got $2 risk here. Buying. We bought the 100 on Friday. Bought the 100. Stop first 98, and 5 to 1 would be like this 107 area. So
Nice.
not starting to fill the gap. We'll see what happens with it. We'll see if this like 104 acts as resistance tomorrow. But again, for now, I know so with Tom, I'm keeping a stop first the low of the day. We got this GTLB. Again, for me, this is more of like a shot. Again, I took a trade in this one a few weeks ago, the end of May, buying up off of support, just literally just trading this range that it was in. Bought up off support, ran into resistance, couldn't break that 60 area as it started to roll over, just took the profits, got destroyed since then. And then again, just so these like 2-3 tight kind of like inside days here. And for some of the days this name has these $3, $4, $5 days that is really inside almost under $1 intraday move on Friday, just a little shot inside day and up or inside day and down. So a little trade there in that bought up to 44 versus 43 dollar risk on this one. Again, very low probability trade of it really bouncing, but worth the dollar shot. This ALAB, really woke up today up almost 8%. I was buying up through that 65 versus again the real out is like 60, but given this bullish engulfing day, no, if it takes out this lower day, I'm very clearly wrong. So there's no point in giving it the extra risk. So lower day stop for this one. So risking $3 in this one. So that's really it. I'm trying to think. The only other thing on the radar is this Intel. Again, Intel has definitely been, has had no love from the Dow 30 names, been pretty beaten up post earnings, but very tight, little base here. Would not be surprised at some point if this 30 gets cracked to the downside, But in the short term, if I can buy up to 31 versus 30, give it $1. Again, it's a lower beta tech name. Best case, realistically, is probably move to 34, but maybe move 32, 33 half into this gap fill, just very tight down here. And if not, anyone who likes a short down through 30, if it doesn't bounce higher, seems like a pretty textbook short lower if it fails. So a couple names on the radar. That's really it on my end. So I'll pass it back to you, Shake.
Send it over. Right. Intel, huh?
Got to go with the low beta tech sometimes.
I had a few really nice entries last week I want to go over. This Reddit has been a cash cow for me, and when it's when I haven't chased it. It's when I bought it off support. So I've had a few different trades. I know we've traded a bunch. But buying off support has just absolutely paid me so well in this name. First trade off support, day after earnings release comes in, kind of retesting this base here. We bought this move on the way up. This was the announcement of OpenAI that their partnership ran. Didn't hold it, so I just got out of the trade completely, waited till it set up, bought through this inside day here, kicked some, gave back, didn't really give us the move we wanted. And then, what was this, last Wednesday? God, this is like, whew. We bought 55 with a low day stop. Yeah, no, that thing was sick. And you're only going to achieve, or 55.50 through this high. You're only going to be able to achieve that staring at the name every single day. Like, there's no way you just come in and say, I want to buy this Reddit, because this, like, I've been watching this tick every day tick. And what I've noticed is if it has one of these sell days, it's not going to reverse it higher that day, which is great for my style of trading. Like even today. So now, all right. So what I did with this trade was I got super long with $1 risk. And my original plan, I was like, all right, I want to hold this thing towards like a retest 75 because it has this huge macro pattern it's working on. But the name is so wide, I kind of switched my plan in the middle, and it's just, realistically, I'm not going to be able to hold on these, like, it makes just like 15% moves, every 3 days. So I kicked most into this 62, 63, recognizing this downtrend resistance. I will absolutely buy this back off support when it triggers. So I'm holding about 1/12 of my original position. Perfect setup to me would be if it breaks tomorrow, today's lows downward, retest this huge support area, just like you see in this area where they've been buying it up. Just come down and then reclaim that tomorrow intraday. I'll load the boat long in this name. It's just kind of the same setup over and over. Comes down, support, rips higher, makes a higher low. So I'm looking for that higher low again and trying to set myself up for this move, because I really think it's testing this 75 once it breaks out of this little pattern. And it's just not really talked about, which I love. It's not one of these sexy, SMCI and NVIDIA names, but it's just giving these great moves for us off support. I'm just going to keep taking the trade. Another one that was really great to us, I didn't expect it to be this good. Bought this PSTG retest. Just bought it this day with a low day stop. And then we got that breakout move to the upside. So a huge part of last week, what I want to talk about is I was looking for long risk based on the action I was seeing out of the market. So this Friday, all right, I was pretty much I was cash when we broke this move downward. Cash. Friday, I'm cash. But then I see this buying come back. I say, okay, it's time to look for risk long if the market wants to participate. So then we have this day, this next Friday, was this Friday? This was the Monday after this buying Friday. Passed the test, higher low, gets bought up, strong close, end of day. Then this Wednesday was a huge day for me. I was just looking for long risk because we opened higher, and the intraday action, what was that? This Wednesday. That was 2 Wednesdays ago. Let me look. No, it was this inside day right here. So it was Wednesday. It was Tuesday, June 4th, before the breakout move happened. Okay, so here's the breakout move. But then this June 4th day, it's this day right here where it's not doing much. But I'm seeing the market, all the names I like, this Reddit, this Bros, I'll go over in a bit. They're starting to act really well. So when I see this action, I'm taking it as, all right, step 3. Market's proving itself for a 3rd day in a row, and I think that breakout move is going to come, so I want to get long as hell. So that coincided with read it. Look at this on that Wednesday, gave
Mhm.
me that move. This bros. I was preparing for the move, so we bought bros this day coming up support. Didn't expect this type of move to happen. I just knew the weekly chart was something I wanted to be involved in. So I see it making these higher lows, and it's got this little wedge pattern. And if you zoom out, it's sitting within this huge base, and it's just storming out of. And now it's already stormed out of that base. Now it's pulling back, giving us a calculated entry off the 8-day moving average. Boom.
Mm.
So now I'm just sitting pretty, and this name looks amazing. Coin was another one with the Bitcoin stuff. Still looks good. I got out of this one because the action Friday. But we see, all right, so the original entry in this coin was off support off through this day's high, right? We see how I'm just trying to get in the best names at support. So then it gives us this move. I kind of, close out my position when it does this day. Tries to make a high, fails. All right, fails the next day, gives it inside day. Now remember the base resistance is this 40 area. It gives an inside day. So I get back long through these 40 highs. And I'm selling it. I don't like trading this name. I think it trades like shit. Oh, give me 1 second.
Yep. All right. So while Shake's gone for a moment, I'll jump in. I'm going to talk about T-Mobile really quick. Again, the main thing that Shake and I have been talking about a lot lately in this video, all these trades have just been, the biggest thing is how little we're trying to risk in each of these trades. So I have this little P&L or risk reward bar here. Again, if you're using TradingView on like the left-hand side, it's under this little projections tab, and you can do your long position and you can adjust your risk reward. And it's very, we always try to aim for 5-1. And I was just reviewing my trade this weekend, and this T-Mobile, again, still in it. We bought this 165 versus at 164. It was $1 risk in this name. And I was finally taking some profit that's 180 just for how insane of a move this was on the weekly. I was not expecting this dramatic of a move. I was expecting, a little bit more of a smaller, more boring breakout. And we just got 2 back-to-back weeks of, phenomenal 15-point move. So it seemed just kind of foolish to blindly hold this because of what my opinions were in the beginning of the trade. So using this little P&L or risk reward tool, I'll do say, okay, I was risking $1. It's taking profits, $15 higher, it's a 15-1 risk reward. And then looking at some other trades where when you initially get in them, like the trades that I'm in now, this QRVO, for example, on Friday, I'm not expecting a 3% day today, or this, A-Lab, I'm not expecting an 8% day today. Of course, I want to buy it through 65, but I'm not expecting an 8% move, nor do I know or expect tomorrow to be another 8% move. So at least this little tool, I could say, okay, for now, at least I want to aim 5-1. Okay, this is my target, 78. That's going to be 5-1. And now for tomorrow, if I can limit this risk, we get a day, tomorrow where it holds with 65, maybe low a day 66 or 65, whatever it is. Push higher, I can keep lowering that risk, and I can keep an eye on that risk reward. Where, again, for most traders in the beginning, it tends to be 1-to-1 risk reward. I'm going to risk $5, maybe make $5. I'm going to risk $1 to make $1. So, this is kind of a tool I haven't used in a bit, but want to just use it for the T-Mobile example just to see what the risk reward was very quickly, and then just using that as another little tool to keep an eye on what the proper target should be. And again, not set in stone. Again, I didn't go into T-Mobile thinking this was going to be a 15-1 risk reward trade, but it turned out to be, because we were able to follow just simple trailing low day stops in this name. So we just kind of kept trailing it and letting it do its thing. And after these kind of doji at high days, it just seemed wise to take some profits. Now for the remainder of my position in T-Mobile, I'm going to continue to trail it on the weekly candles low, because I do think this name can push, higher in the long term, especially given the last 2 weeks. So the remainder of the position, I'll keep it very tight. I booked enough that, if it were to come back to that, I would still be okay with taking, the profits in that name.
So the thing I liked about this coin was it had the inside day just below the base resistance. So what we often see, we call it the shake and bake. It's where a name looks most sexy at the resistance level right here, and then make it appear like it's going to break out, then they kind of mess around along the resistance and then give the real move later. I ended up selling most of this Thursday, and then I got out completely Friday, so I don't have any left, but it still looks very good. And then my radar of names I'm really focused on. I wish I was more active about this First Solar. I gave such a great entry today. This is what I'm really looking for, these support buys and these high octane names. So we see it's got this, it flashes down to this huge support area, and now it just rips. And now it looks like, it's fine. It's going to make that like secondary, huge breakout. To me, this is kind of setting up almost like SMCI did.
Speaking of SMCI, I think SMCI
here.
is like setting up pretty nicely as well.
Yeah,
Needs to-
decently.
yeah.
I mean, I don't know. Names changed a lot. I don't know. I'm not as hyped on it. I think just the way that Nvidia isn't loving them as much as they were loving Dell. That was like a huge bid on it, was that they were Nvidia's company. But through this 823, definitely
Yeah.
looks good there. So I was focused on that First Solar. This EMPH, it didn't give us the move we were looking for, but it came right back. This BE is another solar. I bought some of this today. I got out of some at the close, didn't close that well. So I was seeing this kind of like falling wedge it was making after, the 2-day 30% move. So I think, just setting up for that next weekly move. And if you look at this weekly chart, it's just huge. If it really gets going, like First Solar. So definitely like those solars. This gap is something I bought today because it reminds me a lot of this Hims. Retail strength. We're looking at Crocs, like these retail names are really killing it. Ralph Lauren, obviously Abercrombie and Fitch is the best stock in the market right now. This is way better than Nvidia. I'm surprised that no one's bugging out about this. But so that's got this gap on my radar here. It reminds me a lot of this Hims from last week. You see, we were buying this up this Friday. This was definitely a Friday. Thursday, we took our eye off it, and it just made that sick move. I was buying this. I got out break even because it closed poorly. And then in about a week later, it's up 30%. So this gap, this is kind of the entry I'm looking for. This is what becomes like an A+ entry for me now in my more grown days, is the high octane names at support. This Dix is setting up really, really well. The 229.50, again, retail name, is the macro breakout level of the earnings, but now it's setting up really nicely at support. 2 inside days. So now if it gives me a move through this 219 to 20 area tomorrow, I'll definitely be involved. Some bios setting up. ACLX, thinner name, but just a really, really nice base developing here, just like this Crisp. Same thing, really nice base developing. Now that it's kind of got this consolidation up here at the top end of the range, could probably push through that 200-day, begin that move higher. And some Chinese names setting up. The CPNG, this is like the Druckenmiller stock. This is e-commerce. This is like the Amazon of China, I believe. This Futu, still in this range. It got sold off a little bit today, quickly recovered. Watching this one develop. Not as interested after today's action. What was the other one? PDD. How'd that do today? There you go. PDD. So you see, like, I'm really just focused on names that really move coming off support. Like First Solar, for example. I think it goes much higher. I think I missed the entry today for me, because if I have to buy 290 with a stop at 260, really, really tough for me to make a career doing those type of buys. Risking those 30, needing to make what, 150 in the name to have that 5-1. 150 is 340 is what, move to 440 from here. Just it's not even showing up on the chart.
Yeah.
So, but if I bought it off support today, that's like an A+ entry, and that's kind of entries I'm looking for. But I think there's a lot setting up. There's a lot I haven't mentioned that's still looking pretty good, but that's kind of what I'm focused on the rest of this week, or at least till tomorrow. Again, CPI Wednesday, big news. Fed Day Wednesday. So those are the things I'm mostly focused on. And just trade lately. That's really it. Anything else you got? You want to touch on?
That's it.
All right. Let's continue the great trading through this June. And favorite part of the show. You guys got any comments? Like, subscribe. Any questions for us? Hit us up individually. We'll ask them here. Other than that, we hope you have a great week and we'll see you guys next week.
If you think you're going to get rich overnight trading, we're not for you. If you don't want to read daily or weekly to improve upon yourself, we're not for you. If you're not interested in saving weekly and building your accounts for the long term, we're not for you. If you're not looking to improve yourself daily, we're not for you. If you do want to build wealth for the long term, read weekly, save weekly, do all the right things for the long game, then we might be for you.